Awesome. Well, for those of you that are joining us, welcome and thank you for joining us today to discuss the basics of down payment assistance programs, what they have in common, how they're different, and what you need to know to start conversations about down payment assistance without being a program expert. It's a pleasure being here with you all today. My name is Will Medina from our DPR team. We also have with us Sean Moss, our EVP of Product Development and Operations, Melinda Harris, our Director of Marketing and Communications, Tracy McIntosh, our Business Coordinator, and Keith Futrell, our DPA Program Specialist. They will be answering questions in the background. Feel free to use the Zoom Q&A feature to engage with them as we go. And before we get started, please note that today's recording of the webinar will be shared with everyone. So first, a little about who we are. Down Payment Resource was launched in 2008 to solve a problem that drove a lot of people in real estate and mortgage lending crazy. There was no easy way to find and track homebuyer programs. So DPR developed an easier way to connect eligible borrowers with hard-to-find resources like down payment assistance programs, grants, mortgage credit certificates, and other assistance. We provide tools and down payment assistance program information for real estate agents, loan officers, and ultimately consumers to help all of you find and understand the down payment solutions out there for your buyers. And as a fun fact, we are celebrating 15 years this year, so we are extremely thankful for all the support, and we're looking forward to continuing our mission and our vision. Ultimately, we're here to help you connect home buyers to the down payment help they need. So today we will be discussing the basics of loans, grants, tax credits, and other programs that can help eligible buyers achieve the down payment faster, cover closing costs, and get them into a home sooner than they would have otherwise. So of all the homebuyer programs out there, 74% are some sort of down payment or closing cost assistance. Now, this is really a catch-all category, and we'll dig deeper in a few minutes, but it's important to know that not all DPAs are the same. 81% have deferred payments, meaning you don't have a monthly payment on the DPA loan for some period of time. 54% are forgivable either in part or in full, essentially becoming a grant over time. And 54% are both deferred and forgivable. And then there are still other DPAs that are true grants at closing or are repayable monthly after closing. And we'll break these down further, as well as the affordable first mortgages and tax credits or mortgage credit certificates in a moment. These programs are literally everywhere. Some markets have more homebuyer programs than others, but there is the State Housing Finance Agency in every state, and their programs are available statewide. So there is literally no county or market in the country where there isn't at least some kind of DPA or other homebuyer assistance. So who funds and administers these programs? I mentioned every state has at least one housing finance agency. There are city and county governments, which often have community or economic development departments or housing authorities. A number of nonprofits like NeighborWorks and Neighborhood Housing Services and others operate in markets across the country with varying programs. Many employers, like municipal governments, hospitals, and universities, also offer their employees down payment assistance. There are community action agencies, land trusts, and so many other organizations out there all trying to open new doors to homeownership and promote housing growth and responsibility in their market, which is your market. And they've all got funded and available down payment assistance programs. Let's take stock of current DPA trends. Demand remains through the roof. Providers are increasing assistance amounts, income limits, and purchase price limits to help more home buyers in today's market. And there are new state and local programs which continue to launch in markets nationwide. And 82% of all down payment assistance programs are funded and available. There is so much attention on affordability and down payment assistance now than in many years. And it is key to remember that down payment assistance is still available and not going away. In fact, our recent Q3 2023 Homeownership Program Index report showed 50 new agencies that began offering homebuyer assistance programs last quarter, raising the number of agencies providing support for aspiring homeowners to around 1,300. And the number of programs increased by 54, raising the total number of programs offered to roughly 2,200. And there are more programs that are coming to markets all over the country, offering you more opportunities to continue to help new buyers. Now, as a quick recap, in Q2, we reported on growth in homebuyer assistance programs that expanded inventory options for homebuyers, which included support for manufactured housing and 2 to 4 unit properties, so long as they are owner occupied. This quarter, we reported on trends regarding how assistance funds can be used. For example, some programs allow paying the upfront mortgage insurance premium on FHA loans, the funding fee on VA loans, and the guarantee fees on these types of loans. They allow mortgage insurance offsets so the homebuyer can reduce mortgage insurance premiums upfront, and they allow paying the mortgage insurance premium. We also reported on trends regarding permanent and temporary rate buy-down options. Our report also brings attention to homebuyer assistance programs that are specifically designed to help Native American homebuyers. Now, all of these programs share some basic universal requirements. For example, they are only for owner-occupant buyers. These are not for vacation homes or investment properties, although in some markets, as mentioned, the assistance may be available to buyers of 2 to 4 unit properties as long as they will occupy one of the units. They all still require some minimal investment from the buyer to keep a little skin in the game. This investment can take the form of a monetary investment, which can range from $500 to $1,000 or maybe more. The buyers are also investing time, for example, by completing their homebuyer education requirement, which buyers typically complete a homebuyer education course to qualify for a down payment assistance program. And of course, these aren't cash buyers. We're talking about buyers financing their home with a mortgage, so they have to qualify for a mortgage as well. Now, with these universal requirements in mind, let's take a look at the 3 most common types of homebuyer programs and what's unique about each of them. Now, before we get started, one thing we love to do is hear from our audience. So I want to take a few seconds and just have a quick ask. If you had any recent experience, whether it was last quarter, last week, or sometime in the year, with a homebuyer who was using homebuyer assistance programs, please feel free to enter something into the chat. We would love to hear about your experience. Great, thank you all. So now the 3 most common types of homebuyer assistance programs are the down payment assistance program, affordable first mortgages, and mortgage credit certificates. There are variations and certainly many other names for each type of program, and that's what we'll clarify as we learn how each one works. And remember, as we go, no 2 programs are exactly the same, but we're going to learn the basics of each type so you can understand at a glance what your options are. So first, let's review down payment assistance programs. Down payment assistance programs are by far the most common type of homebuyer assistance in most cities. Every state has a housing finance agency, which is the housing division of their state government, and just about all of them have some form of a down payment assistance program, as well as local government and nonprofit program providers who offer DPAs. These programs are typically grants or silent seconds that offer down payment assistance of several thousand to tens of thousands of dollars to eligible buyers for down payment help. Now, referring to the infograph, grants, gifts that do not have to be repaid. Repayable seconds are funds provided at closing that may or may not accrue interest. and the loan could range from 5 to 30 years with varying repayment terms. There are deferred silent seconds, where repayment of the original amount is postponed until one of several events occurs, commonly when the borrower sells, refinances, or there is some change in occupancy. And lastly, forgivable seconds, where some or all of the original down payment assistance is forgiven. Often, a percentage of the loan is forgiven each year for a predefined number of years. As an example, it's common for a forgivable DPA to be forgiven, say, 20% per year over 5 years. And often, down payment assistance programs also allow the funds to be used for closing costs, prepaid expenses, rehab, or repairs, which can be particularly important to enhance a property or accommodate livability standards for disabled buyers, and even loan principal reductions. All of these uses help the buyer shed the costs of purchasing and financing a new home. We're even seeing more programs allow their funds to be used, as mentioned, for temporary or permanent interest rate buydowns. Now, one of the most common misconceptions about down payment programs is that buyers must be first-time homebuyers. In fact, there are about 2,300 programs across the country maintained in down payment resource, and 39.7 of them have no first-time homebuyer requirement. Beyond that, most programs adhere to HUD's definition of a first-time homebuyer, which effectively states that you're a first-time homebuyer if you haven't owned a home in the last 3 years, with still more exceptions to that rule for widows, divorcees, displaced homemakers, and other circumstances. But in just about every market across the country, we see programs that waive the first-time homebuyer requirement in targeted areas, make exceptions for veterans or certain professions, or just don't have the requirement at all. Now, while down payment assistance comes in many forms, they all help the buyer reduce the down payment burden, open new doors to homeownership, and pocket a little extra cash upfront and along the way for other homeownership obligations. Many of these programs are grants, meaning they are interest-free, payment-free gifts to buyers who meet the eligibility requirements. Others may bear interest, but defer the payments for the life of the loan until sale, or even better, until the affordability period expires. So, for example, many stipulate that the buyer occupy the property for a certain number of years, maybe 3, 5, 7, 10. And then the lien is forgiven, essentially becoming a grant. For those programs that are not grants, many will take second or third lien position to allow for layering of other assistance programs. So what are the eligibility requirements? Well, most have the following limits. Eligibility depends on the program and the funding sources. Income and purchase price limits are always market adjusted, often based on calculations for the area median income, the average income of their market. But basically, they all have income limits ranging from 80% all the way up to 140% of area median income, or AMI, and sometimes even higher, which can creep into six-figure incomes in many cities. They typically have sales price limits too, but those are usually in line with HUD's loan limits in each market, offering assistance at or beyond median home price values. The location of the property is also critical, as each program, especially at the city or county level, offers assistance within specific boundaries, such as city or county limits. But remember that the programs from your state housing finance agency offer assistance statewide, covering your entire market. We even have some nationally available programs integrated into down payment resource. Now, some programs have more needs-based eligibility criteria that involve an evaluation of each buyer's scenario and assistance needs by the program administrator. Most programs will mirror first mortgage requirements, as an example, requiring a FICO score of 620 or higher. Homeownership history makes a big difference as well. Many programs are only for first-time home buyers, but there are many for repeat buyers or even current owners. And remember, a first-time home buyer is simply someone who hasn't owned in the last 3 years. Now, I'll expand on eligibility as it pertains to military service and certain professions in a few moments, but both can open new doors to assistance that may not be available to the general public. Ultimately, These programs reduce the buying cost for a buyer and expedite their timeline by offering down payment or closing cost help that enables a buyer to reduce their out-of-pocket expenses and retain their liquid savings. As an example, think about someone obtaining FHA financing. They'll have to put 3.5% down. If a DPA program helps them bring more to the table and instead qualify for a conventional loan at 5% down, this effectively lowers the monthly payments and the long-term financing cost. Specifically, an FHA mortgage has expensive upfront mortgage insurance premiums and higher monthly mortgage insurance costs that last the life of the loan, whereas conventional mortgages have no upfront mortgage insurance premium and lower monthly mortgage insurance premiums that can be canceled once the buyer gets to 80% loan to value. When you reduce loan to value, you also lower debt to income ratios, which help more buyers qualify and increase their homeownership possibilities. Most importantly, it increases the purchasing power of a buyer's income, allowing them to more readily qualify for the home they like, and in some cases qualify for a little extra home to suit their family needs. Of course, reducing monthly payments also allows for a little extra cash every month to put back into savings, which has been shown to improve default rates. Increased purchase power offers a competitive advantage. Many down payment assistance programs require the buyer complete a home buyer education course, which provides valuable information about the home buying process and resulting responsibilities of homeownership down the road. This better prepares potential buyers for the obligations they face as owners and the steps they'll have to take to get there, ultimately enabling them to be better clients and more adept decision makers for you along the way. And more, down payment providers are offering online education options for their homebuyer courses. Course material is typically in line with HUD certified homebuyer education. Most courses are simply an 8-hour class that can be completed on a Saturday, or during a few evenings of online sessions at the consumer's discretion. This allows buyers to work ahead towards down payment assistance pre-approval and then hit the market as more competitive and informed shoppers. And most importantly, we always like to highlight, these buyers are far more likely, according to HUD and the Harvard Joint Center for Housing Studies, to be successful owners down the road. Default rates are significantly lower when homebuyer education is completed before closing. Now we'll look at another of the most common homebuyer programs, the Affordable First Mortgage. Affordable First Mortgages are additional mortgage options typically only available through a state or local housing finance agency. The most common benefits you'll see are below market interest rates, reduced mortgage insurance costs, and allowances for higher loan to value, or LTVs. For example, Fannie Mae's HFA Preferred and Freddie Mac's HFA Advantage offer reduced mortgage insurance below a standard conventional product, all with higher LTV. And you can typically combine these affordable first mortgage products with down payment assistance and or tax credits from those housing finance agencies. Affordable first mortgages help further reduce the cost of homeownership for new buyers. Lowering monthly payments through lower rates or mortgage insurance pricing helps increase the purchasing power of each buyer and can potentially expedite homeownership for them, getting them into a home sooner than they would have otherwise been able to. Now let's look at the third of the most common homebuyer programs, the Mortgage Credit Certificate. The Mortgage Credit Certificate, or MCC, is available from state and local housing finance agencies in some states. Not every state offers an MCC, but if there's one in your market, take a look. They're a great benefit for homebuyers. This offers a federal income tax credit of up to $2,000 per year. Eligible buyers must get an MCC prior to closing and then get to use it every year for the life of their mortgage. The MCC tax credit helps offset part of your mortgage insurance costs, and you still get to deduct the rest of the mortgage interest you paid each year. MCCs help reduce a buyer's federal income tax liability by offering a credit for mortgage interest paid. Some MCC providers will allow a lender to take the MCC credit amount and annualize that over a year to increase a buyer's qualifying income. And some MCC providers will also reissue an MCC through a future refinance. So let's take a look at an example of how MCCs work. Let's take a $200,000 home. Buyer closes and makes 12 payments in the year. They paid 4% interest, so $8,000 in interest in that year. The MCC allows you to claim 25% of the mortgage interest paid as a tax credit, so in this example, $2,000. But the homeowner still gets to claim the rest of the $6,000 of mortgage interest paid as a tax deduction every year. And here we have a recent case study in collaboration with Loan Depot. It details the success originator Mosey Gatling has had engaging partners to explore affordable mortgage solutions for home buyers. The visual is regarding layering two Nevada Rural Housing Authority's programs, a DPA and an MCC, of course, if conditions permit. The example depicts the potential savings when exploring affordable mortgage solutions for homebuyers. So let's wrap up this breakdown of the most common homebuyer programs with a few other scenarios where there may be additional or unique benefits for your clients. There are many programs that offer additional or unique incentives to buyers purchasing in targeted areas, which are areas with higher foreclosure rates, vacancy rates, unemployment rates, or parts of town most in need of community investment. Typically, there will be no first-time homebuyer requirement. The assistance amount is increased, and the income limits and sales price limits are often higher. The idea is to promote homeownership in revitalization areas, particularly so that core service providers and professionals can live where they work. These targeted areas are all over the map, not just in big cities. Targeted areas are usually bounded by specific cities, zip codes, or census tracts, or maybe sometimes even entire counties. There are also special programs available in many markets that target certain professions, typically teachers and educators, police officers, firefighters, healthcare workers, and municipal employees. For example, in Georgia, the state funds the Georgia Dream program that offers $10,000 in down payment assistance to eligible buyers, but teachers, police officers, and nurses can get an additional $2,500 for a total of $12,500 in down payment and closing cost assistance. The idea behind these programs is to enable homeownership among local core service providers. And many of these programs have very broad definitions of terms like educator, to include not just classroom teachers, but public school system employees at large, like paraprofessionals, librarians, school nurses. Or protectors could include police officers, sheriff's deputies, corrections and probation officers, and more. So look for these programs in your markets. Another targeted audience of eligible buyers is our armed forces active duty personnel and veterans. There are so many programs out there that waive the first-time homebuyer requirement for veterans. Some offer higher assistance amounts too. Many of these programs can be used in conjunction with VA loans and ultimately offer our veterans a little more flexibility to become buyers despite homeownership history. And some of these programs offer the same or similar incentives to active military and Guard or Reserves members. So we've given you a lot of information today, but we certainly want you to know how to access all of these DPA programs once we leave this webinar. So I'll show you a number of ways you can access DPA info and start to enhance your marketing. Anyone can go to downpaymentresource.com and do an eligibility search for free anywhere in the country to see what's out there for you or your client. And if you're an MLS partner with Down Payment Resource, we identify eligible listings in your MLS and match them to all available home buyer assistance programs. And we provide these matching tools in your MLS agent and client portal listing reports. You also get Down Payment Connect for free through these MLS partners. So check out DPR and let your clients know what's available and talk to your lending partners about which programs they offer. And please let us know if you have any questions along the way. And we are continuing to onboard MLSs, and several more will be launching DPR in the coming weeks. Now, if you're a member of one of the partner MLSs, when you are logged into your MLS, look for our down payment resource button on eligible listings. You'll see these down payment buttons on agent reports as well as in your client portals. Click it, and we will tell you or your client which programs are available for properties they like the most. Down Payment Connect is free for our MLS partners. If you're an agent and not a member of one of those MLSs, you too can subscribe to Down Payment Connect for your own DPA search page and lead gen tools. And loan officers, we have a version for you too, which allows you to control which programs consumers see so you are aligned with the product offerings at your company. Now, what is Down Payment Connect? Down Payment Connect allows buyers to complete a program search from your personalized link. This provides you with the opportunity to generate leads by engaging and educating new buyers about the down payment assistance programs in your market. And you can use your Down Payment Connect link on your website, in your email marketing, and all social media. And just to be clear, you are not buying leads with Down Payment Connect. You are taking advantage of our unique DPA eligibility platform to generate your own leads. And nobody else gets your leads, just you. So we encourage you to get creative and reach more buyers and educate them on all of these wonderful opportunities. We would also love for you to join our growing Facebook group, Down Payment Insiders. There, you can join over 11,000 real estate agents, loan officers, housing counselors, and even DPA providers as they all discuss best practices with DPAs, first-time home buyers, working with lenders, learning from each other, marketing ideas, and so on. You can listen in and learn or participate in the dialogue and engage with your peers. And we've also seen that it's a great place to network and connect with loan officers that offer down payment assistance programs in your market. So I'll leave you with a case study that illustrates how important DPA info is for realtors and homebuyers. Amber was a new agent in Florida. No one was helping her peers understand down payment requirements as many of them began to explore homeownership. So she stepped in and learned all about down payment assistance programs and built her business serving those same buyers. Like Amber's clients, DPA customers become customers for life. So help tell their story. By helping them, they will refer their family members and their friends. In closing, feel free to reach out to us with any questions. We are here to help you and your clients find the assistance they need. We can be reached at info@downpaymentresource.com. If there are any additional questions, we will be sticking around for a few minutes to help answer some of them. Thank you all for joining us today. Sean Bell, how was the chat and the Q&A? What are some questions we can answer today?
Very busy. Let's
Awesome.
I'm going to put a link to Down Payment Insiders. Oh, Tracy just put it in there. So Down Payment Insiders is agents, loan officers, some housing counselors all over the country sharing best practices, working with down payment assistance programs, marketing ideas, obstacles, and how they overcame them. So we encourage everyone, we've just put the link in chat several times, but we encourage you to check out the group, listen in and learn, teach, educate, share your best practices, your lessons learned, and so forth, and also network. And there have been a lot of questions about how do I find a lender or a loan officer that can help me with these programs? So I don't know, Will, if you want to offer a few suggestions.
Certainly. Speaking just from the perspective of our website, when you run an eligibility search, that's part of the information that we provide you based on the specific program you are looking for. We understand some providers have specific participating lenders, so we include that list. Of course, if any lender can be used, we also include that message as well. That way, you know from the start whom you would possibly need to be reaching out to. Sean, with respect to the tools that they have, could you shed light on perhaps using what we provide them through the MLS, how they may be able to find? Another resource as well would be our Facebook group, of course, finding lenders there that work within your market.
Yeah, absolutely. Join Down Payment Insiders. That was a segue to that question, but let's can you go back, Will, to the slide with all of our MLS partners, because we're also getting a lot of Down Payment Connect questions. Those are sitting in Q&A right now, so we'll address that at the same time. So as far as finding loan officers or lenders, talk with your broker, ask them if they have a recommendation, talk to your peers, see if one of your peers is working with a loan officer that does DPA. Ask the program providers, check your state housing finance agency's website. They may list top producers. If you have down payment resource integrated into your MLS, so if your MLS is listed here on this page, then you can click the down payment button. And Will, if you can go, I think it's one slide back, but show the down payment button, the $sign. I think we have an image of that. But yeah, there we go. So look for that on listings inside your MLS, whether you're on Flex, Dyna, Matrix, Paragon. Look for this down payment button if you're a member of one of those partner MLSs. And when you click on it, you see a list of all the programs. You can expand the details of any program. And when you do, the very first thing we show you is a list of that program providers, participating lenders. So all of those are ways to find and connect with a lender who does DPA. I'll wrap up that answer or that dialogue with, you want a loan officer that meets 3 criteria. They offer down payment assistance. They are good at down payment assistance, meaning they close on time, they know the program and so forth. And third, they want that business and they want to partner with you in order to earn that business from you. So those are many ways you can find find out who the lenders are. And then Will, if you can go back to the MLS list, I'll just broadly or briefly describe how those implementations work. If your MLS is listed here, and there are more coming, we've got a few in the pipeline right now that we're working to integrate, and we'll be announcing those soon, and more coming. But if your MLS is listed here, you will see that down payment button on all eligible on-market residential listings, as long as they are in on-market status. And your clients can also see it as well. So it's super easy to just click the button on a listing, whether it's the single line, the detail view, and see what's available for that property based on price and location. Your clients, when you send them listings, they can also engage with down payment resource to see what both they and the property that they like might be eligible for. And then if you're a member of one of these partners, to get to the Down Payment Connect part, all of you who are members of one of these MLSs have Down Payment Connect for free, among other tools. But Will, if you can go to the Down Payment Connect slide, if you have it for free through your MLS, you get the lead generation landing page. So when you go to your down payment resource dashboard, which you can click from the MLS dashboard, just look for the down payment button or down payment resource button. And you land on your down payment resource dashboard. The first thing you'll see there, and you can see out to the right, that's an example URL. Don't go use that one. That's actually my demo URL. But you will see a URL, a web address waiting for you there. That is your Down Payment Connect landing page where consumers can come start a search for down payment assistance where they want to buy a home. and then they fill out a form, they connect with you, and you get that lead. They're exclusive to you. They don't go to anybody else. It's your lead. If you, Will, I think you have, oh, yeah, we've got the URL here. So if you're not a member of one of those partner MLSs, then you can subscribe to Down Payment Connect at downpaymentresource.com/DPC. And Mel or Tracy, if you don't mind putting a link to that in the chat. But remember, don't pay for it if you've already got it for free from your MLS. But if you're not a member of one of those MLSs, Kristen, I see you're from ABOR. Yes, Austin Board of Realtors is a partner. You have it for free. If you need to subscribe, Mel just put the link in chat, Down Payment Connect. You can go there and subscribe. It's $24 a month for the Realtor version. You can upgrade to the LO version to get some more features for $39 a month. That is per state, but that gives you access to the lead gen capabilities and more. So that covers Down Payment Connect. There are a couple other questions. Myrna, you asked, how is this different from Freddie Mac DPA 1? First and foremost, we track, monitor, and keep up to date information about every program across the country. I'll speak for ourselves. That's our policy. That's our service level agreement. As far as a feature comparison, we could cover that later, but I think first and foremost, that's the biggest difference. Let's see. Nuri asks, how can I connect with Down Payment Connect as a loan officer? My mortgage broker does not provide anything. Please advise. Nuri, great question. There are programs out there for brokers. So find out who your wholesale partners are. And same thing, go to downpaymentresource.com/DPC. You can see more information about the tool. We do have broker DPAs in there for you to check out as well. And your brokerage may be interested in that. Let's see. Jenny asks, is there a website or material that I can share with my buyers that explains the different DPA programs available? So Jenny, a couple things. Mel, maybe we can put a link to marketing resources in chat, but we have graphics packages, customizable flyers, there are video tutorials for you. There's some consumer facing video. So there are, yes, we definitely have some things you can use. We'll put a link to that in the chat. But also the search itself, let them do a search. Give them your Down Payment Connect landing page. Let them do a search to see what's out there. And that's a great way to illustrate the different DPA programs that are available. So there's a couple different ways to handle that. Let's see. I think that covers a lot of questions, but
there's a good question down. If we are in a partner MLS and get a client, are there any restrictions on what lender they can partner with as long as they work with DPA?
Yeah, not at all. Alicia, that's totally your call. That's totally your buyer's call. There are now, of course, they do have to be a lender that participates with that down payment assistance program, and not every lender is going to do that. But among those lenders that offer down payment assistance, no, there's no limitation. They can choose who they want to work with. And I didn't scroll down. There are more questions here. Let's see. Yes, we're recording. Yes, we'll get you a copy of that. Give us till tomorrow to get that out. Let's see. Still getting questions about the landing page, Down Payment Connect. So we can't illustrate every MLS, but here's the gist. When you log into your MLS, go to your products menu, third-party products. It's going to look different for all of you, but look for Down Payment Resource. Now, I'll give you a few examples. If you're in Matrix, if you're a Matrix user, it's probably going to be on the Matrix dashboard in the external links widget. If you're in Flex, I think it's across in Paragon or Flex, it might be across the top of your MLS dashboard. It depends. I can't sit here and go through every MLS system, but go to your MLS dashboard, and wherever the third-party links are, that's where you'll see a link to Down Payment Resource. If you don't find it, then just reach back out to us. And Will, can you put the contact information back up? And I'll put our email address in chat. If you can't find it, let us know. We can't sit here and go through dozens of MLSs and where to locate it right now, but we can certainly do that. And Jim, no, you wouldn't do that at downpaymentresource.com. You would do it from within your MLS system if you're a member of one of those MLS partners. But if you're not, you can always subscribe to Down Payment Connect. Let's see. Mel, Tracy, anything you want to, any themes you were seeing, any other questions you want to answer?
Sorry, not from me, Sean. I mean, I think you've covered it. We still got quite a bit coming in. I'll try to include some of this in the follow-up messaging, some of the common questions, some resources and references. But no, I don't have anything. We've had some great questions. Thanks to everyone for participating.
Yeah, absolutely. And I'll add, since so many of you are still with us, you're the diehards. So I'm going to throw this out there one more time. If you've closed a loan with a down payment assistance program, or where your buyer used a down payment assistance program, or if you've closed a transaction, let's say this year, maybe you've done several, or you're working with one program frequently. We love telling those stories. We'd love to have you as a guest speaker on a webinar talking about, how good is your loan officer at these DPA programs? How did that relationship evolve? What program are you using, and what is the impact it's having on your buyers and their ability to qualify and get into a home? Were there any delays? There are a lot of misperceptions out there about these programs, and we think by and large they're unfounded. So if you've closed some DPA transactions recently, we really want to know about that. We want to help others learn from your experience to the extent you're willing to share it. And in exchange, we'll do what we can to get you some PR, whether that's through a blog post, a webinar, some MLS, case study or something. We really want to know those stories. So I'm gonna put our email address in the chat one more time. If you have such a story, please do reach out. We really want to tell that to help other agents, to help other loan officers. There's the email in chat, info@downpaymentresource.com. Share that with us. Share the successes and the challenges and the obstacles, so we can all learn from them and grow the pie, as it were, make everybody better at these programs. Will, I'll throw it back to you for last words. We still got a lot of people throwing comments and stuff in there. I don't think we can get to all of these, but info@downpaymentresource.com if you still have more questions. And Will, final thoughts?
Certainly. Thank you. Just to echo what Sean said, everyone participating today, everyone joining us today, our team, we enjoy hosting these webinars, and we do so frequently. So we ask that you go visit our website and look at the cadence in which we'll be hosting these webinars. Everything is up to date. Use our educational resources as well, our articles, great material. Once again, we appreciate everyone who came today. If there are any questions that maybe we weren't able to get to, info@downpaymentresource.com. Feel free to submit them there. And we look forward to being with you again, and we hope you have a great rest of the year.